Welcome to Trading Lounge and the US indices for Thursday, November the 4th. So we've got wave 3 here with an A, B, C, D, E for 4 here, then 1 and 2 and 3 and 4 and 5 for 5 of 3. But I just want to go to the weekly chart because I think I need to lift this up 1 degree of structure, and I think once you see that it will make a bit more sense as well. So for the weekly chart here, so 1 and 2 and 3 and 4 and 5. So we've still got a nice run to have to continue through here for this, but yeah, and we'll look at that target too, and once that's done we'll see some sort of ABC correction and then further up at that stage. Yeah, so that's that. Let's just go back to the daily chart for a moment. So I will probably lift this up 1 degree of structure, so that means that I'll plonk that over there. I won't do that today or tomorrow, but just to, feel it out a bit further, I guess. Okay, so from here we've got 1 and 2 here and 3 and 4 and 5 at this point. Now, if I've made a mistake in here, then this wave 4 would eventually come back over to here for this. But we don't need that for the time being. What we can do is just count 1 and 2 and 3, and then we'll go to the 4 and the 5, and then I'll just check on it. If I can see that the move here is corrective, I'll see where the rest of the markets are and yada yada yada. But this would be in line with the US banks, by the way. Food for thought. And on the tick chart here, coming up to that green wave 3 there somewhere. Let's just get a bit more data in here. So I don't need to go, we better go back, I suppose. So from this wave 4 here, just to get you into the picture, we've got, I don't need a lot of this in here, so I'm just going to do a little bit of housework in here. That's enough for the time being. And we've got we've got wave 4 here, so we've got 1, 2, 3, 4, 5 for 1, and then back for 2. In fact, we don't need these here anymore either. That's all good. Don't need those. We'll have to lift that up 1 degree. We've got a few trades in here. I don't know if you're still in it or what the case may be, but then we've got trades here and here for this. Pretty good timing. I mean, obviously we didn't buy the bottom here, but we already had positions there. So 1 and 2 here for that. So that's all good. Keep it a bit clean. And we've counted up as 1, 2, 3 here for the green wave 3. This could be a little bit different here. I've put wave 4 just in here as an A wave, and A, B, C for the B wave, and 1, 2, 3, 4, 5 for the C wave. Yeah, it overlaps, and you can throw stones at it and all the rest of it. But anyway, we'll come back to that. But in the meantime, we've got 1 and 2 and 3 and 4 and 5. There may be another little push up into there. That looks corrective as overlapping wave structures. Looks like that. So it's probably 1, 2, 3. There's probably another little push in this here for this to finish off there. But we are looking for that wave 3 top here somewhere. So just be a bit mindful of that. But you may as well just if you're trading an EFT or whatever in this, and you don't have leverage, well then you may as well just hold through this wave 4. I mean, in a way, we're looking for a classic trading levels pattern across this wave 2400, and then we'll push up to 25 at that point. So yeah, let's just see where the S&P and all that is at this stage. Yeah, it looks like it's not finished. But with the classic trading levels pattern, you have the arrival, the reaction, the first high above the level, and then the ABC. But sometimes it just sits on there, so it could be the variation of that. So in the normal structure, we would look for this to come all the way down here, but the variation of that, which we need to be mindful of, is it just sits on the level and then moves up. So that reference point high and the second reference point high is important for trading at that point. So in that case, we can look at well, if you wanted to trade long, we'd look at that one, and then we can drop it down to here. What do we got here? 1 and 2. Yeah, it could be in 5 waves at that point, so we just have to be a little bit careful. So the first thing I always do is just find the 61.8%, which is just in here for that. So being long above that would be fine. It's just getting to that. Can we get in any earlier? That means we can drop that down onto that level without any problems whatsoever. That will be safe. So the other thing that we can look for here is to try and figure out, if there's going to be a B wave rally here, then, well, that looks like 5 waves in here. So I'm just wondering if that's down for 1, back for 2, down for 3 here, an A and a B and a C and a D and an E here for wave 4, and then wave 5, and we come back here as an A wave, a B wave and a C wave back to supply levels and then go down. I'm not quite sure, so just understand that yeah. Well, that's 1 and 2. I just don't think that, just makes wave 3. Maybe we can look at, yeah, I'm not quite sure. Anyway, I won't burn up time. The trend is up, just stay there. The NASDAQ, NASDAQ here should take us up to about the 18,000 eventually with all of this. It'll just take time to get us up that high. Yeah, we'll have a closer look we'll go to the 4-hour chart, but I'll spend the time on the S&P. So in a nutshell, like Microsoft and Google and all the rest of them, or not all the rest of them, but some of them, we're looking for the top here for this, for that top of that wave 1 here. So I still think there's more to go up here, and this could be calculated differently. So I want to go to the S&P really. So okay, so with the S&P, I mean, if that is wave 4 here of this degree here, then we're going to quite easily make it to 5,000. And if you've been around the markets long enough, that the market loves big numbers, big whole numbers, and they're just great psychological points to work to. So I'm thinking from wave 4 here, as up for wave 1, and when we look at Microsoft and that, we're looking big wave 1 to the upside here, and then wave 2 and 3 and 4, 5. So it's not really out of reach. It's not, it's not. Yeah, anyway, let's just cruise into the daily chart here. So from wave 4 here, we're looking for 1 and 2. And as I just mentioned, we're looking for coming up into wave 5. So 1 and 2 and 3 and 4 and 5. So, yeah, I mean, it's possible to put wave 5 on top of this one here, but it's a little bit short when you look at the weekly, when you look at the daily and the intraday, it's like, oh yeah, that could be, but I don't think it is when you zoom out, So in a nutshell, what we're trying to do here is look for that 1 and 2 here, the top of wave 1. That's our job. So we're going to explore that a little bit today. I've got a few things to chat about. Let's cruise in to the 4-hour chart, and we'll pick it up from that intermediate wave 4 there as our reference point to that stage. Now, yeah, a couple of things here. First of all, I'm okay with this structure, and as you know, I always start with the most conservative count and then I build on top of that. So if I looked at this as wave 3 and 4 here, then we've got a good case of 1 and 2 and 3 and 4 here, and then 1, 2, 3, 4, 5, and we're done for the top of wave 1 in this case, right? But I want to talk about this a little bit further because there's a good possibility that it can move up further, but I just want to, it's not like I'm trying to give you a lot of different options and all the rest of it. It's not like that. It's like there's 5 waves, so that could be the top. So we need to be careful. But I think that this can expand further to the upside. So let's just take a look at that for a moment. I mean, it's just good to explore things, you know. It's in this case, we could also look at so in the last case we looked at this wave 1 here, and this wave 2 here, and this wave 3 here, and then 4 and then 5 finishing off at that point. But in this case, we're looking for it in a slightly different way. We're looking at it as 1 and 2 and 3 and 4 and 1, 2, 3, 4. Sorry, 1, 2, 3, 4 and 5 here for wave 1. And if that's the case, then it could pull back to the 61.8%, which is back at the 46 here, and then move up for wave 3 at that point. So, and the A wave would be a sharp sell-off. Like, it's Thursday in Australia today, so Thursday we normally look at the bear day, and yeah, so let's see how that goes, and then Friday we can look to be bullish again. Now, the other thing that I want to discuss here as well is that this was very sharp pulling back here, not typical of a wave 4, but more typical of a wave 2. So in this case, we could play it out a little bit further in this case. So let's just so this becomes a little bit interesting as well. So in this case, we can look at, well, that's the low of wave 2. Let's just assume that's the high. You can make any adjustments that's required in the off hours or whatever, if there's another little push up there, which there probably is. We probably look at that as 1 and 2 here, but I haven't pulled that apart on a tick chart just yet. But the main point here being is that this would be, well, that's quite good. I think I'll just take the top from that point there. We'll just look at that as the wave 4. So that really kind of halves the problem a little bit, doesn't it? It sort of, it means, doesn't get us out of the woods, but that means that can come down to, what numbers? That's 46.40. So I think we'll use that. It should take us up there, and then that would be wave 3 at 47, and then wave 4 back again. So that sort of paints a slightly different picture at this point. So that means that this little dude here can rock and roll up there. Oopsie daisy. So I like that sharpness of that wave 2 there, which would probably go there. Oh no, it doesn't, it goes there, sorry. It nearly overlaps this here, or does it overlap in fact? It's pretty damn close. Yeah, it does. So that really, I mean, technically being pedantic about it, is that that would be the correct count at that point. So I think we'll stay with that, and if we take this low here, and I'll take that to the 4700, then that would bring this down to this here, so that would be there. And there we have it, folks. I think that's it. with a variation in here, or two variations. The other variation is that this here, I don't think it's the case, could actually, and I'm not even going to put it there. I should put it there, should I? No, I don't know. I'll put it there because we can just delete it in a minute. So, well, I know that the other markets still need to push up, like stocks, so I don't need that. So this this becomes a little bit valid here, but slightly, because this is overlapping that. So yeah, okay. So I think this is where we're at with this. I don't need to go to the tick chart for all of that, but if you want to count 5 waves up there, I'll leave that to you. And just remember, this wave 4 can break the trend line here. That's kind of the normal thing that it does, and I kind of always expect it to. If it doesn't, then I kind of thinking, where have I gone wrong with my life? Okay. I think that's it. So, okay, well, that's it. So, yeah. I don't know. I mean, it'd be nice to go to 4,800. That would just sort of be good. But we're also in group 2 here. So this level here, it will become a bit more important later on, like today, and also later on over here. So 46.50, 72 and 80. So it's all of minor group 2. And of course, there's lots of other important things in here, like 46 is important, 47 is important. But there's lots of things going on in this space here, but that's just the skeleton of it all. There's lots of, you know, sub levels and micro levels in there that are important, but I won't go into all of that and bore you to tears. So that's we can put that up there because that's minor level 8 now. We can just change that to 8. 8's a profit taking number. So that should ring true for us up there. So very close will be that wave 1 here, and then pulling back for wave 2 at that point. Should be interesting to see what the news is for that, because it should be short and sharp and out of left field, not expecting it and all the rest of it. So we'll see what that is. Okay, enough waffling. Thanks for tuning in. Much appreciated. Cheers.